Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, April 29th, 2008. Well, as we get into today's video, we're going to focus on tomorrow at 2:15 p.m. Eastern Time for one reason only. That would be the Federal Reserve's interest rate decision will be announced. The market is pricing in a 25 to 50 basis point cut somewhere in the middle. InTheMoneyStocks.com is focusing in on a 25 basis point cut in the overall interest rate. All right. Now, at the same time, InTheMoneyStocks.com does believe that there is a small chance, very small. More than likely, it's going to be a 25 basis point. I'd say there's a 80 to 90% chance that it'll be that 25 basis point cut. But the rest of that 10% chance leaves it open, the door open for a no interest rate cut at all. Now, the reasons why this may happen, well, number one, you have commodities at all-time high, oil at all-time highs, gold at all-time highs, and those are all characteristics of a dollar that is extremely weak. All right. So in order to bring those down, the dollar has to strengthen, which, by the way, we've been seeing rates overall inching higher out there. In addition, we've also seen the dollar strengthening on anticipation. So that leads us also to believe it's a leading indicator showing us that the market is beginning to price in the Federal Reserve is almost done lowering interest rates. And again, that would be the signal that we are watching on those fronts, as well as a couple proprietary techniques that show that we have reached a near-term bottom in the dollar, as well as a couple tops in various commodities. All right, so let's go over what happened in the market today. The Dow closed down about 40 points, the Nasdaq was up about 1.5 points, and the S&P was down 5.5. Overall, again, these are not big losses or big gains. We had a mixed market today, just like yesterday, and there was just lack of volume, just like yesterday, again, as the market awaits the Federal Reserve. All right, now that's the key here, folks, is that you have to understand going into a Fed meeting, especially ones that are anticipated like these have been, that the market is on hold prior. All right, if they release it on Wednesday, as they are tomorrow at 2:15 p.m. Eastern Time, the market will be on hold Monday and Tuesday and all Wednesday until that comes out. All right, it's just the way it is. No one wants to step up and trade ahead of that and get in positions, obviously, for normal reasons, that it could be very volatile and the market isn't exactly sure how people will react. Now, the interesting thing in regards to what we are expecting, and again, just to mention, we are again looking for that 25 basis point cut, is that you can start to see commodity prices react accordingly. And we looked at these as leading indicators. So as we get into the daily chart, I just want to touch on one of the great calls InTheMoneyStocks.com made again yesterday and has made over the past week or so, calling the top on oil, agri stocks, and gold and other commodity plays out there. Number one, we went over two key charts yesterday. You guys know them. Halliburton was one. Halliburton. Look at the daily drop today. We called this as a possible short play, as we did expect the DUG, which was another one we'll go over. That's the 2 times short oil and gas play. And we did call out Halliburton as being a short candidate yesterday. Look at the drop today. It was down $1.82 or basically to $45. So that's a big percentage drop there. Great drop. You guys can see on the intraday here that this is where it closed yesterday and this is where it closed today. And that was just plain and simple, folks. You can't go wrong there. That was a great call by InTheMoneyStocks.com yesterday. The other one was SLB, and again, down $3.10 to $99.26. This was mentioned yesterday as being a short play by InTheMoneyStocks.com on the video, and can be found in yesterday's video as well. Just look back and see it, and look at the move down here on the day. Huge move down on this play. Now, the other one we really highlighted yesterday and in the Sunday night market chat, which is a free forum for all those interested in checking us out, was the DUG, which again, could have bought it in any range here in the morning, and by the end of the day, what a move up. And we did call this as a possible long on the daily chart. Here's the daily. We mentioned the move up, the consolidation, and now the next move higher here. And again, it's going to run into some resistance coming into this 20 moving average, obviously. And again, what we did in the chat room, and those of us that had it in the chat room, unloaded it into today on the strength. Now, that's not to say it won't go higher tomorrow, but the key is here, just like earnings, we don't play earnings. We are very cautious going into any Fed rate decision because you never know how it's going to react. So it's better to take profits, especially sizable profits like this in the DUG, and move on and wait at least for afterwards. There's always going to be a second opportunity to enter this, and we will continue to analyze it and watch it as it goes. And we do think ultimately it's going to get to this 20 moving average, at least, if not much, much higher, possibly up there eventually. But you know what? It may need to spike lower tomorrow on the Fed, or maybe it spikes up on the Fed. We're not sure, and thus we stay out of the play. We only try to do the plays that we have the best risk-reward ratio. We like to say 85 to 90% chance of winning on the play. You know, whether or not that happens is another story, but that's the way we look at it. That's what we try to perform for ourselves. All right, so again, quite the calls yesterday and the chat room on the video especially. And now let's just take a look here at a couple of the other things. We mentioned the ag stocks were topping out in the Sunday night chat as well. Huge drop on potash, POT today, dropping $12. Monsanto, a huge drop as well. Great bear flag formation here, folks. You don't get a better flag pattern than that. Look at the drop that ensued today. And again, this is all correlating with the dollar that is strengthening now. We're seeing the UUP, which is the dollar index, bounce. So here's the lows. Here's where on the daily chart of the UUP where we are now, and you can see it's nothing sizable, but you know what? Nonetheless, it's a nice little bounce there. It is into resistance now, so we have to be aware of that, and that's another reason why we have to be aware going into the Fed tomorrow that anything can happen and most likely will happen. Therefore, we play it on the very, very cautious side. Okay? So let's just go over the intraday market now. We covered the good calls yesterday in the video and the prior video calls on those key stocks, and they've worked out. Every one of them worked out beautifully. That we did call. And again, you guys can look in the previous video to scout that out and see that we did call it. But here's the intraday ES. Let's flip to the intraday ES. And you guys can see it was just a kind of a up and down market today. Again, in a very tight range from peak to valley here of the market. Okay? This is a small range. This is a 6 to 8 point range on the S&P futures or the E-Mini here. This is the June '08 contract. And aside from this one hard sell, it was relatively quiet during the day. And again, this is a small move. Even though it looks big on the chart, it's just because there wasn't a lot of volatility and big moves. But normally this is a very small move. It was just accentuated by the overall lack of volatility in the market. Light volume, as I mentioned. Let's take a look at the daily SPY so we get a better sense of where this market's heading into this rate decision tomorrow. Again, you guys can see what's been going on here. And one thing I do want to point out is notice the volatility quieting down. And this is another signal. And you guys know InTheMoneyStocks.com has been calling for a move down coming in early May. We're still finding out which exact day we expect it to come. But we do think May 5th, May 6th, somewhere in the early May area, even as early as May 2nd or so. And we'll try and iron that out ASAP. Okay. Now, but one thing I do want to point out, the volatility on the bounces gets bigger and bigger the harder you drop. So you drop hard here. Look at the size of these candles. Big, big, big. Now, the next bounce up becomes smaller candles. Notice the smaller candles. The next bounce up even smaller until you're topping out here. Now, this doesn't mean we don't have one more power move up on the daily. All right. I talked yesterday about explosion moves at the end of moves. When you have a chart like this, and I wish I had a stock chart to show you this, it's oftentimes you get a power move up like a day where we spike up big on heavy volume. Every amateur out there says, "Oh, this means we're going to jump up higher," and every institution says, "Oh, great, here's some volume for us to sell into it." So obviously the institutions unload to the little guy. The market tops out on a push up. And that could happen. Now, again, that's one scenario. The other scenario is you just kind of wobble around here until selling comes in based off a new, small shoe to drop, and we drop down. Now, we're still gauging how much we think the markets will fall. It may just be a minor move down, meaning a retrace of the entire move. You have a move like this, you may do a 50% retrace, which would coincide approximately a little lower than that 50. There's Fibonacci levels we're analyzing along with our proprietary levels. Those institutions out there that are watching and are interested, get in touch with us ASAP. We can iron that out a lot faster for you. Also, definitely get in touch because we are filling up on the side of consulting. So get in touch ASAP, those institutions. And those private people out there that want to just know for themselves, feel free to contact us and do some private consulting. We're more than willing to help out any individual out there that's looking to learn the markets and trade alongside of us. Other than that, folks, that's what we're seeing in the market. You have the Fed decision tomorrow, so it's going to be quiet. You do have a little economic news tomorrow morning, so really ahead of the Fed, I don't expect, even if the news is a little bearish or bullish out there, the economic news, you're not going to see a major move in the market ahead of the Fed. Everything will be taken in stride. Even if it gives a near-term move in the markets, you'll still see the market pause before the Fed and quiet down. And then on that Fed, you'll see volume intense come in. And just to show you guys here the volume, let me get rid of that little line here. Look at the volume the last couple days. So small. I mean, it's been light volume all the way, too, by the way. And this is the other thing that worries us a little bit, just to point this out. And I'm just recognizing it as we go. We have mentioned this in the chat room. Look at volume, guys. On this whole move up, look at the volume. All right? On the whole move down and all the choppy trade, you had volume in this range. Now, this tells us two things. One is that it's very likely that we do see the sell-off coming that we expect. The other thing is that a lot of money's on the sidelines at this point, scared money. And that eventually, once we flush out or do whatever we have to do here, and we'll analyze how much that'll be, then that money may start to come back in the market once people feel secure. Come join the Swing Trade Alerts, the chat room, the options alerts. The chat room's great, folks, because you can totally ask us questions. We're on the mic. You guys type to us. We do some day trading. We do a little talking. It's fun. Have a wonderful day.